Get on board with crypto. Sheesh. Hello, everybody, and welcome to another fantastic episode of Last Off with Ribs. That's right, I'm your little riblet today with some slathering sauce. And what are we going to talk about today? Strategy. What is my current strategy? What has it been for a while? Does it flip-flop all the time? Yes, it flip-flops all the damn time. But what I'm telling you today is I am creating a stronger, better system for myself other than just dollar cost averaging whenever I get paid and putting whatever amount of money each week I can into it. I am going to be looking into different exchanges in order to put my cash somewhere. Since we're in a downtrend, things are very volatile. I don't even know what's happening. We could talk about that just a little bit. But I really want to dive into a better, more intermediate strategy with my investing. Now, I am about to finish my master's degree in finance with a concentration in investing in securities. So I have been developing a strategy for quite some time. I just have not been implementing it because I haven't really had the time, haven't really been thinking about it too much because I've just been so busy. I work a full-time job. I'm a student. I travel a lot to see my significant other. She's very far away from me. And I try to do this a lot. So I try to do these at least one a week. I try to do a little bit more every week. I try to get at least one to you guys every single week. I am moving in about a week and a half. So you might not see stuff pop up right away, but soon after that. But the strategy, instead of just buying whenever I have the cash, it's more strategic than that. So what I will be doing is, like I said before, looking at different exchanges to see what stable coins can I earn with and how much can I actually earn using that strategy. I want to maximize the APY or the APR, so it's annual percentage yield is APY. And then it's what does APR stand for? Let's just see annual percentage rate, which that can actually, it's a different number than APY. So you can give yourself an APR, which wouldn't be annual, but it would be a different rate based on compounding. So if you do compound, your rate will technically be higher than the APY. Because an APY is something a little bit more stagnant than that. Anyways, let's get into it. There's a whole bunch of different things with that. We don't have time to talk about that. That's pretty much what I'm getting at. So I really want to maximize my APY and my APR completely. So by using stable coins to put my cash somewhere, because stable coins are essentially cash, I shouldn't be taxed on if I need those dollars for whatever purpose, but I'd be earning more in that account than I would be even in having a money market account or having a regular, definitely more than a regular savings account. I definitely stake wherever I can for certain tokens. I don't stake everything, but I do stake a good chunk of my tokens. And I do have another account that is DeFi, and is technically what I have on there was before they changed the ruling, so I'm luckily enough I can keep my money there. But Celsius has changed their rulings. If you want to earn on their thing, you have to be an accredited investor, which there are very high qualifications for that. You have to be either make over $200,000 a year, or you have to invest a certain amount of money annually in order to qualify for that. So I honestly, I wish I made $200K a year. That'd be sick. But I don't, unfortunately. That's why I'm an average Joe like everyone here. And if you are loaded and you are watching my stuff, then you are not an average Joe. Good for you. Great. Glad you're here. But everything I tell you on this channel, guys, it's not financial advice. Please always do your own research because I can't force you to do anything. If you listen to me and you take on my strategy and you fail, that's your fault. Not mine, because you are not making the moves at the same time as when I'm making them, because that is literally impossible. How would you know? So you can use what I'm saying to help build your strategy, but it's not me building the strategy for you. Remember that. So none of the things that I say on my channel are financial advice. Do your own research, make your own decisions for yourself. Moving on. So I actually opened this up a couple days ago. This is a trade. It is a very low trigger point. Now, I do not expect, and this is why I'm doing it, I do not expect the price to get below the previous all-time high of $19,600 and something dollars, whatever it is. I do not expect it, but we've seen some pretty unexpected things lately in the prices, in the markets. I have this trade down there. It is a very conservative trade because it is so low. I doubt that we'll see this price, but if we do, that'd be cool. And then we go up from there. Like, what a great trade! But I did open this a couple days ago. It will trigger at $19,400, and the price range is between $17,000 and $35,000 for a Bitcoin price. This is a margin trade, so anything that I earn, and it is a 4x margin trade, so I'm using leverage on this. Very risky. I'm using 150 grid lines, and between each grid, I should make anywhere between 0.24% and 0.61%. We will see if this trades out, this plans out, but this part of my intermediate strategy is actually a very expert level. This is trading. So if you're not an expert trader, like, don't be doing this stuff. Do your own research on bot trading. These bots are built into Phoenix, or Phoenix, however you want to say. I call it Phoenix, whatever. I don't know. But do your own research when it comes to doing any of this stuff. Use those paper traders where it's like, okay, how much money do you have? Use fake money to trade. It is based on the real market. It's just not your actual money. So yes, obviously, if you're winning, you probably in hindsight would say, oh, I should have made that trade. But if you end up failing on that trade, now you didn't lose any of your money. There you go. Now you're winning. You didn't lose anything. You can make, like, every experience that you have, whether it is a gain or a loss, should go into your strategy, and then you should be able to develop a new avenue or just kind of continue things because maybe you don't have enough data to move forward with anything different. So, again, not financial advice, but this is what I am doing. This is a very low on the totem pole trade. I do not actually expect this trade to actually happen. So why would I be doing it? Because just in case, because unexpected things happen constantly in this market. So it's very hard to say that this will or will not happen. So I'm doing it as a just in case buffer. And if it does, and I make money, like, good for me, I did it. It'd be really awesome, actually, if it worked. So this is my expert level, part of my intermediate. If we get it back into the dollar cost averaging piece, using dollar cost averaging will help me build a better portfolio. I will be able to gain more crypto at those lower numbers. So instead of buying every week like I've been doing, I'm going to pool the money that I would be normally buying every single week and hopefully getting limit orders in, but I will be earning money on top of the held money that's there. So if it's held on the exchange, earning certain APY or APR based on my holding portfolios of that cash, I can now build a cash flow and then also build my dollar cost averaging. Since we're in these lower numbers for Bitcoin, I do want to change my strategy to something like that, because if I can buy at those lower tiers, I gain more crypto in general. Instead of buying at 30K, like it is, the price is like right now, instead of putting in a limit order at 30K, I could put in a limit order at 29,200, and now I've gotten a little bit more Bitcoin in my wallet instead of buying at higher prices. I'll be buying at more precise prices and then hopefully gaining more crypto at that point, thus increasing my earnings later on. So it's a bit of a more intermediate strategy for dollar cost averaging. But I want to make that clear to you guys in that. So why am I doing this strategy? It's because of this, actually. So there's now my trade is just a little bit below this blue line. So this is the all-time high line, and I consider that to be a support mechanism at the moment because I think we're doing something like over here. So if we make this bigger, sorry, it's freaking hot where I am. It's it's like 80 degrees. It's like almost 90 degrees in my apartment, but I don't have the AC on right now because I don't care to have it on right now. So I'm a little sweaty, so I apologize, guys. It's almost 90 in here. So, and it's like 73 degrees outside, so I'm going to open up all my windows after this because it's hot. But anyways, I think we're playing out into something like this, very elongated market. It's kind of like what this whole thing, an elongated market, and then with a dramatic downtrend is kind of what we're seeing here. And now I would love to be able to compare this to like how the dollar was performing at this given time, because usually when the dollar is getting stronger, Bitcoin will actually decrease its value. So the price of Bitcoin will actually go down, thus giving you more buying power to get more Bitcoin if that's what you're doing. And that's kind of where dollar cost averaging comes in, because obviously if we can look at this chart, we notice that since 2014, the price has just gone way up for Bitcoin. So, I mean, like, this is already good news. So dollar cost averaging does that for you. So if you have it on a set schedule to just buy every week, that's a great strategy. It's a great strategy. You're just going to, over the long term, you're going to go up, and it's going to go up. Like, it's just been proven since 2009. You bought it for pennies, and now it's worth as much as it is now. So, like, crazy, right? Crazy. So I think that we're going to play out into something like this. We're going to see this dip. I don't think we're going to come down as low. We might come down to this $22,000 range. I honestly think that we'll come down to that point, since we're currently up at like around the 30K range. And we're like testing this area out pretty heavily. But since we had a dramatic downturn, kind of like here, dramatic downturn, market capitulation right here, and then we had a major pump, came back down, retested these areas again, because it looks like, so if we take a look here, if I put a line here, we've really like, so resistance, support, broke through the resistance, came back down, broke through the support, it became resistance here, and then created a support here. And then this created resistance, and I broke through resistance, thus became support here, and then so on and so forth. And then it did do the same thing over here. It just kept getting broken. So I think that's what these major support lines are. I don't have too many legacy lines. This from the all-time high to the bottom, it is a line that we did break right here. So this is why I'm changing my strategy up heavily from a beginner standpoint, because I'm no longer a beginner. I've been in the market for way too long. I want to be a little bit more aggressive with how I'm doing things, be a bit smarter, and also gain more crypto, because the more I have, the better I will be in the long term, because that's what I personally think. I personally think that Bitcoin and cryptocurrencies are going to stay for the long term. If they weren't, it would have died off a while ago. Whatever. Because if countries are adopting this, I believe there's 2 countries now, El Salvador and the Republic of Africa. I don't remember. I think that's what it is. But there are 2 countries in the world that accept Bitcoin as legal tender. And I believe there's somewhere in Europe where they're accepting it as legal tender. I think Sweden or something. I don't actually know. If you know what that is, leave it in the comment section below. But that is my strategy. I will briefly touch on the other thing that I have added to my strategy, which I believe is a bit risky in my opinion, because these projects have not been around very long, but they are NAS projects, NAAS, Nodes as a Service. I have 4 of them, and if you have watched until the end, leave a comment down below, VaporNode, as that word, because now I've known that you watched all the way until the end and you got to see this. So leave that in the comment section below. And if you are interested in anything crypto, leave VaporNode as that word so that you've watched, and then leave a little something else for me, and I will actually read it. I don't have that many comments. I actually read all the comments. I try to leave a little information myself. So anything is great. I love feedback, guys. I hope you guys really enjoyed this. Please always do your own research out there in the metaverse and in your life. Until next time, keep blasting off. Get on board with crypto. Sheesh.